Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Charu Chanana. She's the market strategist from Saxo Markets in Singapore on Tuesday, the 9th of May. Charu, is always great to have you on the show.
Hi, Brian. Happy Tuesday.
Now, Charu, before we get your insights on how the numbers stack up, let's take a look across the region at the numbers. But first, we're going to start with cryptocurrencies. Bitcoin is at 27,630. It's down 1.79%. Ethereum is at 1,840. It's down 0.91%. Now, looking across to regional exchanges, we start with the Straits Times Index, where you're at. The Straits Times Index is down 0.29%. Bursa Malaysia, the KLCI, is down 0.29% as well. Shanghai is up 0.42%. The ASX All Ordinaries is down 0.26%. The Nikkei is up 0.97%. The Hang Seng is down 0.41%. And rounding up the numbers, we've got the Kospi, which is down 0.05%. Charu, your views on market performance in the first half of the day?
Looks like a pretty mixed performance, Brian. I think the outperformance that we're seeing in Japan is particularly coming from some good earnings results there. And I think, again, something we've discussed previously on your program as well, Brian, that the optimism is coming back to Japanese equities since Warren Buffett has given his nod, but also it seems like, the productivity improvements that they can bring with automation and the likes are looking like Japanese markets can outperform, at least the US markets and other regions as well this year. So I think that's somewhat being reflected in their earnings as well. But overall, I think traders, investors still being on the sidelines ahead of that critical US CPI release this week. So it's been a pretty quiet start to the week. And then the banking sector also looks like, there's no new updates. So there's some calm, no news is good news kind of a thing. So there's some calm around that as well.
Now, Charu, I want to take up the point that you made about an ever improving Japanese sentiment. One of the things which shocked me just yesterday was the fact that the Bank of Japan was concerned about accelerating inflation. Now, this is a narrative that we have not heard in almost 3 decades. And that obviously, again, great lends credence to what you're saying in terms of that just optimism, in terms of productivity, in terms of Japanese equity, in terms of foreign funds inflows into Japan.
Yeah. Yeah, so I think those are some of the really important factors. Inflation is coming back to Japan. Now, whether it is enough for the Bank of Japan to tweak its yield curve control policy or not is still a big question, because they want to kind of wait to see that these price pressures are really driven by a growth in wages. And we had some wage numbers out this morning as well for March particularly, and it does not look like that we are seeing any strong wage gains in Japan for now. But still, I mean, inflation is running way ahead their 2% target. I mean, coming from a point where there was deflation for so many years, it does look like this is taking a turn. But yeah, we have to see whether this sticks out or not. And then in terms of equities, other things that are particularly of note is that Japan is the big supplier of automation across the world, and in an economy where labor shortages are really important factor to consider. You would potentially see growing automation in a variety of sectors, and that means that Japan being the leader of that, the demand from Japan is going to continue to be pretty strong on that as well. And I think all of that, plus, like I said, I think the recent nod from Warren Buffett, he has these investments in 5 commodity trading houses in Japan, and he remains pretty bullish on that, still planning to increase investments in those commodity houses as well. So overall, a lot of good stories lining up for Japan equity traders particularly.
Now, Charu, I want to then draw our attention to something that's worrying investors right now, which is really the debt ceiling issue in the US. How is that impacting market sentiments?
So yeah, I think that's a big one to watch today because we have President Biden addressing the Congress about it, and negotiations are supposed to begin. Of course, I mean there is a risk of a default, which can be pretty severe. But if also we just see government shutdowns, even that can impact economic activity. So I think a range of policy options will be on the table today. Of course, they would want to avoid a default. So whether we see a short term increase in the debt ceiling, which means you just push the can down the road, and volatility in the rates market, in the equity markets, continues because of not really reaching an agreement there. But if we do see things moving towards an eventual agreement, which means of course raising the debt ceiling, we have to see whether it comes with any kind of spending cuts along with it, or other budgetary reforms, which can again impact some particular sectors in the equity market. So if they announce spending cuts, then that means sectors like defense, IT, healthcare, which are heavily dependent on government spending, can see some impact there. And lastly, of course, the Goldilocks scenario, if they don't do anything else but just raise the debt ceiling without any other constraints on it, I think that could obviously result in some relief rally for the markets after some weeks of stress on this issue.
Now, Charu, final question I've got to ask you is about a lending survey that came out yesterday. Could you give us some insights into what are the key takeaways around it?
Yeah, so I think that was something was important to watch because we have been in this banking crisis, and there are fears that banks can tighten lending standards, which can lead to a recession down the road. But it appeared that of course, lending standards are being tightened, but it wasn't as severe as some market players probably expected them to be. I think that was one relief, but the other factor was that demand seems quite depressed, more depressed than what was expected. So of course, the tightening that we've seen from the Fed is having an impact. It's not as severe right now, and I think it still does not justify the rate cuts that are being priced into the market expectations for the Fed. But it's really something that is raising concerns of a recession, so we need to keep it on a watch.
Now, Charu, as always, thank you for your insights. Thanks for coming on the show.
Thank you, Brian. It was a pleasure again.
We've been speaking to Charu Chanana, market strategist from Saxo Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.